Hey guys, welcome back to the channel. I hope everyone's doing okay. So I think it might be a good idea to go over some big picture factors that will affect high yield investors for maybe later down this year or maybe early next year. So I think during like the summer months, investors get complacent, especially like right now, like the VIX is fairly low, volatility across the board for most stocks are, like close to like their 52-week lows. And that explains like part of why, like, if you're looking at like the high yield option based ETFs, like most of them, the returns haven't been like that exciting. But keep in mind there's a lot more entrants now. And then there's also like, the themes ETFs. Then you have like the some other leveraged option based ETFs coming out from Granite shares as well. So there's going to be like more competition. And then like there's already like low volatility, so volatility might actually get even lower. So at least for like maybe like the rest of the year. But then I also want to start thinking ahead, like maybe like for early 2025. There might be some things that could be an issue for high yield investors. So for example, like I don't know if like the job market is okay. I've seen like different versions of this where like they try to like splice and dice and try to explain like why things are going down. And then there's actually less full-time jobs now, but there's also more part-time jobs. So like in aggregate, like we're kind of like a net loss. So this could be a problem in a few months. And then I've also seen like different versions of like the credit card debt. So they're saying like for younger Americans, like especially for Gen Z, the amount of like consumers that are maxed out is looks pretty alarming. But then like there's also different charts of this of saying like, well, in total we're okay. So we have to kind of keep an eye on this. And of course, like you can find like these charts on like the in the links in the comment section below. So feel free to check them out at your own time. And then here's something that's very interesting. So like the retail investors, like the net purchases of leveraged equity ETFs are kind of on the high side. So like the last time we've seen this, like maybe at the end of like 2021 and early 2022. So guys, just be careful out there. Um, uh, you know, Leverage by itself is not that bad, but when people pile in too much, bad things will happen eventually. And then I also kind of wanted to look at like the margin debt. Again, you can find this on like the Finra website, but they won't give you like this nice chart. You have to kind of do it yourself. But they have like the actual like spreadsheet. So if you want to kind of dig into the data yourself, like I kind of encourage you to do so. So for at the end of like April 2024, like the margin debt is around 775 billion. Now this is not as high as like at the end of like the last kind of mini bubble, you know, in late October 2021. The I guess like the all-time high was at 936 billion. So that's why I still think that we still have probably some more upside ahead. But of course, like if a good chunk of that is due to margin, then we all we have to kind of watch out for that. But so far we're still not near the all-time high. So, but that is something that we have to keep an eye on. And then there's something from like the ICI, the Investment Company Institute. They have stats on like ETFs and mutual funds. So at the end of like April 2024, we saw like a $35 billion outflow. So that was kind of like not even like a real correction back then. And I guess like people were kind of like nervous and so they took money out. So we're still waiting for like the full May 2024. They have it done by like the weeklies. So I just to take an estimate, it looks like people piled back in like at the end of May 2024. So I think we should still be okay for the summer months. And then this is just like the breakdown by like the different different categories. So broken down by like domestic equities for like domestic, the world. You have like hybrids, which are like, those 60/40, or like those time based funds where they're split between like equities and bonds. And then you have like taxable bonds, then you have municipal bonds, and then you have like commodities. So this is, kind of shows like everybody, across like the board, for like the month of like April, everything kind of like people just like pull money out. So we're just gonna wait for like the full May data. But there is like the weekly data available if you want to like look at it yourself. So I think in summary, we should. This is just my guess. We should still be okay for 2024, but I think a lot of retail investors and just like consumers in general, people. I think we're feeling financial pressure. There's a lot of stress building up. So don't be surprised in 2025, like where we might have like a correction, or even maybe like a start of a mini bear market. So hopefully things won't get that bad. But I think in general, like high yielders, we still have some time, but just keep an eye out. Have like different funds available. Maybe have some cash built up just in case for buying opportunities. If you like this type of content, please consider giving this a like. Please subscribe if you can. Super thanks, I'll also greatly appreciate it. So thank you for watching. I hope people make some good money out there, and I'll see you in the next video. Bye now.